Hey everyone, Jen Henry here from Slingshot Futures Trading Group. Welcome back. Over the last week, we've been putting out a few videos here and there going over market timing and timing your entries. Today's another addition to that, but using a combination of indicators, the stochastics in this case, which you can see on the screen there, as well as market structure to aid in timing. Now, the method that we're going to be talking about this time around works really well in strong trends that are breaking away, and it kind of shows you where the best locations are to enter back in the trend when it's ready to resume, rather than chasing it down and then selling at the bottom and having to sit through all of the mess. So the indicator that I have marked up here, you can see all the different lines, and you probably know where this is going already, but this is a stochastics indicator. And the stochastics is set to a setting of 141. It's an extremely fast indicator in this case, with a period D being 1, period K being 4, and smooth being 1. And we don't want it smooth, that's why it's on a setting of 1, because we want this to respond very quickly when the market is breaking away. So first off, we need a breakaway market. Now obviously, this is not really a breakaway market when we're inside here. This is kind of dead and slow and there's not much going on. But when the market broke down and really started racing away, that started giving us clues that the market is in a breakaway trend. And really what we're looking for is for a kind of a relief pause in the move down to allow the sellers, in this case, because it's going down, to reload. Now, what we're looking for in this case is looking for the stochastic to go from the bottom range all the way up to the top. And that quick snap higher is really, really preferable. You want to see it really kind of snap up like that quickly. Otherwise, it's going to make it a little bit more difficult. But not just waiting for, oh, hey, the stochastic went to the top, let's sell. We need to see it above that area, but we also want to line this up with some form of previous structure. So if we're looking for a channel to the downside, this looks like a fairly obvious spike in channel down. If we mark that up here, we're waiting for that to line up, and guess what? It lines up perfectly with the top of that spike in channel, and we have an overshot on that move from bottom to top on the stochastic, showing that this is an opportune time, or at least a good location, to be looking for potential shorts back down, and it rotated back lower. Now, another one, a good example of one that's setting up, because nothing is ever perfect, that is kind of a clue in why we use structure in combination with this, that it's a little bit early to the party. We already had the test on the highs and a push back down again. Whenever we have a downward channel, you expect a break and you expect the market to roll back over and try to reattempt that direction. Well, in this case, we have that break, and we're looking for a market reattempt to the downside. So we already have a short bias, but here is why we really like seeing this swoop from bottom to top, because in here it got all kind of herky-jerky and really messy. That's not necessarily what you want to see. It still told you when around about the time it was when the high was being put in. But because there wasn't any structure or anything else, it made a lot more sense to wait for the range highs to get hit along with seeing it push back up there. So this is a good example of how it can give you an idea that you're in the right area in terms of timing, or at least right around the corner to it, but utilizing structure along with it really gives you the big clue that it might be time to kind of kick things off. Now, as it broke down, right, which worked out pretty quickly once it decided to roll back over, we have sellers trying to push back down again for another continuation leg. You've got the first move down, looking for a second leg down, waiting for that little pop higher. Told you with that big swoop where the likely area was that sellers were going to start coming in right at the top of that bull bar, and it rolled right back over. Same thing over here, although it wasn't as nice of a swoop, it went from bottom to top. And again, this kind of piggybacks off of what we saw in price action here. Price action really didn't move that much either. So again, it did go from bottom to top. That's what we like seeing, and as long as it's lining up in an area of structural importance, in this case, the wedge could very easily have wound up a little bit further, and that gave you a couple other areas of key interest. And then when we started rolling back down again, nice little breakout, quick little pop, strong market to the downside. Sellers are basically looking to sell everything, and that's a nice pop. Now, another really good example of something that is maybe setting up, but doesn't necessarily fit the bill in terms of structure. Once again, waiting for an opportune location. Even if we drew a channel way out here, this isn't giving us any idea that we would want to be a seller here, right? It's way, way down here. So there is a little bit of context that is required, because look what happened when it finally made it to the top of the channel. Then you've got the poke higher and sellers come back in. Location is always the key piece of information, whatever you want to call it, the key piece of information, and looking for entry reasoning after that location has been achieved is how you really nail down that timing. Hopefully you found it useful, interesting, entertaining, and hopefully you had a great week of trading. We're wrapping up the month, wrapping up the week, and man, price action's been a little bit slower the last couple days. Fingers crossed now that we get out of this, going into next week, things will get a little bit more spicy. But aside from that, I hope you had a great week of trading. If you have any questions about really anything, whether it's this topic, talking about the stochastics and timing for entries, or if you just have any other general questions, feel free to shoot me an email, jhb@ssftg.com. Don't forget, on the main page of Slingshot Futures Trading Group, you've got the free 3-day trial. You can see us implement all of the different strategies that we talk about and find our way in and out of these markets that are hauling all over the place. That's going to do it, though. Have a good one, and we'll see you all in the next one. Thanks.